So, what did you think about the three tech chats that you saw today? One was, I mean, there's so bicycle sharing, AI, and then the other one on logistics. What did you make of them? And what was kind of your impression?
Well, I think all three were fantastic startups, so congratulations to all three of them for being invited here. I think they were all very emblematic of things that are very unique about the entrepreneurial ecosystem in the Hong Kong area and Greater China. Often that is overlooked by the folks in Silicon Valley. A lot of the VC firms tend to want to invest 15 miles outside of the Stanford campus and don't really get very far out. They certainly don't jump on planes to come out here like I do. And many of them don't know what WeChat is or what Chung or any of these companies that have been able to have this type of breathtaking growth. And so the three companies that we just saw, I think if they showed up at a Silicon Valley investment committee, probably would have been given very little attention. And of course, all those VCs would have been very incorrect about the opportunity here. So I think they're just great examples of startups that really tap into this opportunity in this part of the world that is so dynamic.
Sure. Anyone else? That's great commentary. Anyone else on what you just heard and saw?
We've been looking at Hong Kong for a while, and I think I agree with Francis's point earlier that Hong Kong's come a long way in terms of the quality of the startups that we see over the last 2 years, especially. So I was very encouraged to see the level of companies and to see unicorns being groomed and all that. So very encouraging.
Now today we do seem to be in this tech revolution again, just almost like the internet boom. And what's your, as investors, how are you able to evaluate all the opportunities that are out there today in the tech world, in the tech innovation world, from AI to bike sharing to mobile commerce to messaging and big data and all these robotics, and it's just so many areas are exploding at the same time. How are you able to evaluate all the opportunities that are out there today? I've been hearing a lot about specialization among venture capital firms, so maybe it's the specialty time.
We have a smaller fund. We are managing two $200 million funds, and we're doing our third dollar funds, and so we have to focus as a smaller fund in a big country in China, right? And against the big names like Sequoia and IDG, where I used to work. So what we do is mostly investing in technology companies and companies with innovation, and the companies cross-border businesses, and with a lot of entrepreneurs based out in Silicon Valley, and coming back to China for the big market, and also building on local Chinese teams to serve that market. So we have done mostly hardware, a lot of the hardware companies, semiconductor devices and medical devices, and also to B business, mostly to B businesses where we focus on also software, now artificial intelligence. So with a smaller focus, that I think we should be able to get to look at more of those portfolio companies, and hopefully to be able to make some investments where we have investments in all of these areas. Tech areas.
Right. Andrew, also at 1955, you're also specializing, aren't you?
Well, it's funny because I actually think that we're non-specializing in the sense that we're
Okay.
we're quite diverse in terms of the sectors that we cover. I think the area where we specialize is the transfer of technology from the US and Europe to this part of the world. But in terms of sector, we're quite broad. We're doing a lot of the save the world categories like energy, environment, food, agriculture, health, education. And I can tell you I have 0 PhDs in any of those areas. And so when I was growing up at firms like Lightspeed and Khosla, I was a general partner at Khosla Ventures for 5 years with Vinod Khosla. I actually had the pleasure of working with a lot of VCs who were not specialists, and in fact, they had made significant returns across a wide range of sectors. Chris Sheppy at Lightspeed had made money in semiconductors, in biofuel, in consumer, in e-commerce, in women's products, all kinds of different things. And what I learned there was that a lot of what tied these investors together was exceptional pattern recognition around what makes for an exceptional opportunity. And Vinod used to always say that in order to make outsized returns as either a VC or entrepreneur or executive, you need to be contrarian and you need to be right. And so often if you're a specialist or someone who's just very, very deep in one very specific thing, often that creates a certain set of biases that might make it harder for you to identify the next big wave or the next big opportunity. And so at 1955, our team is made up of people who have been touching a lot of these different sectors that are less traditional in Silicon Valley and on Sand Hill Road, but have done enough of these industrial technologies, save the world technologies, to develop some pattern recognition around what might make sense here in Asia, where there's a survival-driven demand for a lot of these types of technologies. So we do specialize in that bringing of technology here, but we're actually quite diverse in terms of our sectors of focus.
And 1955 Capital was a fairly new fund. And so talk a little bit about how you got it started and the name for it and the significance.
Sure. So I left Khosla about a year and a half, almost 2 years ago. After 5 years there, I was, I think, the longest tenured non-founding partner at Khosla. So I actually had a great experience there. But I found that not unlike a lot of the other venture capital firms on Sand Hill Road, Khosla tended to be a bit more US-centric in the way that we looked at deals. It would almost be impossible for me to get a deal through investment committee if there wasn't a significant US angle. So again, exhibits A, B, and C earlier today would not really be possible in the context of Khosla. If it's a company that has this great environmental technology or food technology that needed Asia to be sort of the first market of commercialization, that would be very difficult to get through the investment committee. So I saw an opportunity to spread my wings and take a chance on my training from more than a decade in doing these types of things, and was lucky to be able to launch 1955 to focus on, again, very specifically the strategy of helping these American and European entrepreneurs build bridges here. We announced a $200 million raise in the early part of last year. I spent about a year sort of exiting a lot of my investments and boards at Khosla, and we're up to 10 people now, have made some investments, and we're off to the races.
And the name 1955?
Oh, yeah, so it actually originally was a code name because I was still in my office at Khosla, and my wife had started a luxury handbag company that some of the ladies and men in the audience should look at, called Senreve, SENREVE.com. And she called it Project 1920. And so both of us were kind of hiding out doing our own thing. She came up with a much cooler name, and I had trouble coming up with names of Roman gods, rocks, trees, different variations on my wife's name, daughter's name. And so 1955, as it turns out, is a very special year because it's the year one generation of revolutionaries gave way to another. Einstein died that year, Alexander Fleming, who discovered penicillin, Charlie Parker, and born that year, Bill Gates, Steve Jobs, Eric Schmidt, and my old partner Vinod. So it also had a special meaning of being a nice nod to my former partner who really changed my career and gave me an amazing shot.
So what does Vinod think about what you're doing today?
Well, a lot of the press when we announced it that in last year, that was one of the first questions they all asked me, and he answered those questions by tweeting it the morning of our launch. He tweeted to his 1 million followers a really nice message to me in 1955, vote of support. So it's been great. He's been really supportive and and our firms are still very aligned in trying to do something that is not just about generating returns and making money, which we absolutely focus on, but also focusing on sectors that are really good for humanity and good for this part of the world and elsewhere.
So why aren't you investing in companies with PhDs?
We are. I just don't have a PhD. in
Oh, I
anything.
see. I misunderstood you then.
No, yeah.
Okay.
We actually, funny enough, Vinod, there would be this chart that we would have in a lot of board packs that we would request of our entrepreneurs to show the split of their team personnel based on advanced degrees. And so for when you're investing in a lot of these companies where you're looking for a technology breakthrough, we actually used to put a very big premium on companies that hired enough PhDs to really push forward that type of innovation. So, the company earlier, again, is very impressive in that regard.
Yeah, absolutely. And but one thing that didn't strike me as unusual is that at your firm, you're not taking board seats at your investments.
You mean at 1955?
Yeah.
Oh, no, we do. So actually, I would say because of the nature of this type of tech transfer, at least in the early going, we would want to take board seats in every one of them. When I was at Khosla, I was on 10 boards, managing another 7 companies when I left the firm. And in pretty much every one of the cases, I was the only East Asian board member. And among the investors, really the only person who kind of looked like they might know something about China. And luckily, I can speak the languages and have done business here. So for us now, with this strategy, it's essential that we're involved, we're plugged in, and really actively helping these companies.
How many board seats are you on now?
Now I'm only on a few.
Only on a
So,
few, because
yeah,
if you're
so
doing 10 board
just
seats.
started over again. So
Yeah, okay, start over again. If you're on 10 board seats, it gives you very little time to go out prospecting, I would imagine.
well, I went from 10 to 3 to 0 on the Khosla side in the span of 15 months. So it was a bit of a transition.
Okay. Yeah, I'm sure, from being with a fund that's so well known to doing your own thing. So Murray, you're here this week in Hong Kong, and I guess you were in Singapore last week, and you're kind of getting, I'd like to hear your impressions of what you're seeing in the region, and how do you think it compares to what you're used to in Silicon Valley?
Sure. Can you guys hear me? Put this on. It's a really tough act to follow. I'm always reminded that really talented venture capitalists also speak really fast, reflecting how quickly they think. So,
Steve Jurvetson is like the fastest talker I have ever heard.
I apologize for not being as facile as Andrew just was.
Although he is, Morrison Forster is our fund counsel, so they're fast enough.
Okay, this really was not a plant. I promise you, it was not a plant.
So I just want to take a quick crack at Rebecca's earlier question, given the practice that I have about what sort of distinguishes, since as opposed to the rest of my panelists who work in one shop their own or somebody else's, I'm blessed with covering tons and tons and tons of venture capital and other private investment partnership firms. And what I would say it reduces to, for those of you who are investors yourselves, is have a real defined concrete process that you follow very rigorously. And if you're an entrepreneur looking for money from one of those firms, make sure you know what those rules of engagement are so that you don't waste time of Andrew or others by pitching something that they're not interested in because you've done your homework and know that, or customize your pitch consistent with what it is that they want. I think you'll set yourself up for success. 5 or 10 laser-targeted, laser-focused pitches, more likely to get you money. And for those who are using the usual venture capital financing model, it's a 1% hit, I suspect, for most of you in terms of the companies you actually fund as a percentage of those that you see. 1,000 cross their desks. They take maybe 25 meetings to narrow down to 2 or 3 investments. That's just the law of math in terms of what they see. So what I see in answer to Rebecca's question directly to me is globally an incredibly vibrant ECVC practice. I'm one of our global co-heads and cover both the company and the investor side of it. This is my first trip out to Asia since I joined the firm a couple of years ago, but I have a global practice myself and have been lucky enough to be around. And Hong Kong feels, for these purposes, like Berlin, and Singapore feels like London, and capital is flowing every which way. And I think Andrew's totally right in terms of narrowness and focus within the Bay Area. My own view is over time Silicon Valley will become better known as the Bay Area, because my own perspective is what used to be Sand Hill Road is now South of Market in San Francisco. Whether I'm right or wrong probably doesn't matter, but there are great companies being formed all over the place. I didn't vote for Trump. I think he's the worst president we've ever had. And one reflection of that is his immigration policies, which are driving great entrepreneurs offshore that otherwise would come onshore. People who either come for a brief accelerator program and can't stay and have to leave, or people who can't get in the first instance. That means great businesses being formed elsewhere outside the United States and being capitalized outside the United States. People in this room well know that unicorns and decacorns, the largest number outside of the United States, are here in Asia. And that says a lot about where the world looks. Okay, I'll stop.
China's second in the world for number of unicorns, and of course, U.S. is still first. Do you realize I just put that adjective in there? Okay. Jeffrey, I'd like to turn to you and ask you to talk a little bit about Southeast Asia. You're in Singapore, and I've been seeing a lot of action out of Southeast Asia. Indonesia is very strong, and other markets. Singapore itself has had a couple of home runs recently. Can you tell us about what's going on?
I actually live in Shanghai, and but I recently stepped down as chair of the Singapore Venture Capital and Private Equity Association. So a little bit of statistics. Southeast Asia went from 250 million invested capital 5 years ago. Last year we crossed 3 billion. Don't quote me on this, but I suspect that we'll probably cross 5 billion this year. There have been a couple of very, very large deals that I think will swing over to large. So record numbers in terms of invested capital in Southeast Asia. I think the like many other markets, there's a little bit of a dumbbell effect. So there's a lot of money in the really early stage stuff. There's a lot of capital in the late stage stuff. But in between, there's really nothing. And so the big story in Southeast Asia, I think, is really what's happened the last month. Right? C, formerly known as Garena, went public on NYSE. 7 billion market cap. There is a little over a billion. And then Razer IPO'd here in Hong Kong just a few days ago. 5 billion market cap, half a billion fund raised. So
Very successful IPOs.
yes, and I think as far as the venture market is concerned, and the investment community, the LPs who are looking at Southeast Asia as a potential market, finally there's something that proves the investment thesis. And I think the investors that are holding back are now beginning to seriously look at that market. We will see there's something like 15 unicorns across Southeast Asia. We'll see a string of them beginning to follow suit and to file for their IPOs. There's a lot of talk under discussion already. We've got a couple in discussions with the banks and so on as well. But because of that, I think the mid-market will start seeing some activity. There's now a proven exit, so investors will say, hey, let's look at the companies before they become unicorns and move up. So all in all, it's a very, very exciting time in Southeast Asia.
Is there a particular market in Southeast Asia that you're keen on?
Southeast, if there was one single market or one or two single markets, I think, if you look at the population base, Indonesia is the largest. But you look at companies like Garena, you look at companies like Razer, they're not really country specific. They're sort of regional. Garena sort of defines, greater Southeast Asia, because they made a claim about being the largest e-commerce company in greater Southeast Asia, and somehow there was some dispute as to what greater actually meant. It covered some markets that are technically maybe not part of Southeast Asia. But all in all, e-commerce is exciting, gaming's exciting. There's a lot of there's a lot of consumer internet plays being played out at the moment. I think one of your earlier questions as to specialization and all that, we're beginning to see a little bit. I think a venture capitalist job is getting tougher and tougher to do. I think as far as Asia is concerned, the low hanging fruits, the early days of investing behind Me Too companies with China, it was the Me Too after the U.S. the .com boom days. With Southeast Asia, a lot of that is following suit, copying from China. I think those days are over, and we're slowly but surely transitioning. This is both in China as well, transitioning from a consumer-driven startups into technology-driven startups. And I think when you're looking at technology-driven startups, there needs to be more depth in terms of team capabilities. You need a good mix of generalists and specialists to be able to the generalists, because they find it easier, I think, to Andrew's point, to think a little bit out of the box. But the specialization is really to understand to a deeper point of view as to what drives an AI company, and being able to ask the right questions. So
Yeah, I'm sorry, go ahead.
Yeah, I think our job is getting harder and harder. It means building larger teams than we used to be able to operate. And I think the most recent challenge that's been thrown our way is a lot of the startups say, "Hey, I don't need venture funding anymore. I'll just do an ICO."
Oh, you preempted me. I was going to ask about the ICO phenomenon and how it's impacting your business. Why don't we delve into that right now, since you just brought it up?
I think I made a comment yesterday on one of the AVCJ panels, which is, it is an easier route to get funding if you're an entrepreneur. I don't think the window will last. I think it will become harder and harder to raise money via ICOs, and that's because more and more investors are going to get burnt. So I would encourage people to raise money via an ICO. I would not encourage people to invest in one. But I think the reason why ICOs are doing really, really well at the moment is because it is essentially a unregulated market. And that means that investors will get hurt. But I think we also need to somehow reflect that, maybe the traditional way that we think about finance and all that, my view, we're overregulated. And so there's a lot of restrictions placed on what we do, placed on how we can fundraise, based on how we can, tap public markets and for that. And I think it's a good point of time to actually think about whether or not there is some middle ground, particularly for startups trying to raise private capital.
You made the point about, and let me ask all the panelists here, you made the point about how it's much more difficult today to be a venture capitalist, and you have to have bigger teams and more in-depth teams, and you have to have all this specialized knowledge. Is this going to impact the returns of venture capital as a class?
Well, I'll disagree slightly with the proposition. I don't think the job of a talented VC is any easier or harder today than it's been my entire career, both as an investor and as a counselor. What I think right now makes it trickier and harder is being disciplined on valuation. I think this is
valuation.
I think this is all about valuation, and quite frankly, whether it's some of the people up here with me or those who were mentioned, my guess is they continue to be spectacular investors by trusting their instinct and their judgment about whether to invest or to sit on the sideline. Many people who claim to be venture capitalists, in fact, in my jaundiced view, threw darts and managed to hit something that was called Uber or Airbnb and marketed themselves successfully as a VC investor, and they're not. And that's totally fine. That's their own marketing game. But Rebecca, you've composed a panel here of people who actually are thoughtful, talented investors, and I think they may put fewer dollars to work, or they might put dollars to work in fewer investments and all the rest of it over time because of valuations. But I'm not persuaded that more people thinking about a particular company are what distinguishes the analysis.
Yeah, I agree with a lot of what Murray said, and I actually feel like venture capital as an asset class is not only kind of broken, but it doesn't generate great returns as an asset class. If you take the 1,000 venture capital firms that are members of the National Venture Capital Association in the U.S. and the 5,000 plus that claim to be in China, if you look at the entire pool, there is a lot of noise. Historically, the significant amount of the returns are concentrated into a relatively small number of firms. I would say, relative to, is it harder or harder or not? I do think that if you look back at venture capital in its earlier days, it was sort of a product of asset allocation from the 80s, maybe early 90s, with a relatively small group of people giving some more calculated risk takers the ability to identify these neat technologies. Now, 30 years later, things are very different when you have so many of these people chasing after what isn't a much larger number of high-quality deals. And so I think Murray's point about valuation is very valid. I think it goes back to the point I said earlier. I believe that in order to generate outsized returns in a more systematic way, and not just the one-shot wonder type of way, you need to be able to systematically look at things that not everyone else is looking at, because eventually the music stops. And in 1955's case, we are looking at what is generally an overlooked area in the United States. Not very many people are looking at clean tech. In fact, it's a bit of a taboo word to even use that. Sustainable food and agriculture. There aren't 30 firms that are chasing after the deals that we're looking at. And most of the deals we're looking at, we're the only firm looking at it. And in that case, I have 3 months, 6 months to do my diligence. I can get the technical experts, use some of the PhDs on my team to analyze it. I could spend time doing business development with Chinese or Southeast Asian partners so that when I sign the deal, I actually have strategics coming in. The most recent deal that we did and announced a month or so ago is in the lead acid battery area, which is just about the most unsexy area you could look at right now, but $40 billion market. Every vehicle out there on the street, most of them anyway, have a lead acid battery in it, and most grid scale operators already know how to use lead acid batteries. And so the material inside is a silicon plate that can extend the lifetime by 5x and make it recyclable, which solves the two great challenges of lead acid. So we had months to do our diligence, and when we led the round, we had 4 strategics that had done validation themselves that came in on the round with us. So by focusing on an area that is generally being a bit overlooked, and in some cases might even be very much undervalued, we got in at a great valuation, you're able to potentially have a much, much steeper return curve if you turn out to be right about the trend and if you pick the right team and technology. So I think that is very much we're trying to go back to the roots of venture capital, figure out, well, how did some of those early firms in the 80s and 90s get such outsized successes? And it wasn't by chasing after the herd or being a follower. It was about being a pioneer.
I think, Jeffrey, you made that really interesting point about how today it's, and the following the herd, how it was all about following the herd in China for the longest time. All the Me Too investments that were being made, and that was kind of like the low-hanging fruit that we talked about, and outsized returns from those. But today does seem to be more difficult. And Stella, I know you were going to say something, so let me just.
I want to add a point to the valuation that Murray talked about and Andrew agreed to. There is so much renminbi funds that have been raised in the last 3 years. If you look at the last 3 quarters in China, actually there are only $9 funds that were raised. A dollar fund within mainland China, and there are 40 other renminbi fund. So if the renminbi fund that was being raised just for the VCs, if you talk about the private equity, the PE funds, it's basically like 96% to 4% renminbi fund to dollar funds. This is why everybody, new investors with renminbi fund, and many of them are like government funded in early stage funds. They come in and flock into the market. So this is the difficulties that all the VC funds are facing. And so the dollar fund investor like ourselves, we have to also raise our renminbi fund, because entrepreneurs would not want dollar funds anymore, because there are so many more exits other than going IPO in the US or being sold to international firms. So there are so many other exits, including like the third board, you know, 新三板 and 创业板 and 中小板 and A shares. So all of these opportunities for exits, and this is why we're facing more difficulties. Like Andrew said, LPs are putting less money in percentage into the VCs because the returns are like high single digits instead of the 30%, like in the past for the top quartile.
Seeing Chibo?
Yeah, I guess before the panel ends, I just want to kind of jump in a little bit. I've just been kind of sitting here, kind of absorbing all the wisdom from my fellow panelists.
You're just a pretty face.
You're VC of the year. You don't need to say anything.
Right. So I think, I mean, three things I just kind of want to touch upon. I mean, I think one, I mean, basically at all these events, and even like all our LPs come to me, and they're basically asking us about like what we think about kind of crypto and ICOs. And so I think this is something, I mean, being in Hong Kong, obviously, this is a very hot topic for the last 6 months or so. And I think that everyone from like the banks to the traders to just kind of people in finance, everyone is thinking about it. I think from an ICO perspective, I mean, it's very different from an IPO, right? Because IPO, basically, you're buying equity, and that's something that every company can do. ICO, you're buying tokens. And so there are certain businesses, certain business models that are more suitable to be tokenized. And there are maybe 90% or 95% of businesses where tokens don't really make too much sense.
Get just a few examples.
Like, look, I mean, if you're
Which
like
ones
selling,
make sense?
if you're like selling pork as like a pork farmer, like a pig farmer or something, I mean, do you want to tokenize that, right? I mean, you could potentially, right? But is that something that, I mean, like people would, you know, maybe. But it really depends on kind of investor appetite, right? So, I mean, I think at the end of the day, I mean, if there's like 1,000 kind of ICOs going on around the world, I mean, how many of those are things or tokens that are actually going to be used, right? How many of those are actually going to have liquidity? How many of those will kind of have a sustainable kind of long-term development path? I think that that's something that obviously a lot of investors should think about. From like how that relates to kind of VCs and early stage investors like us. I mean, I've been at events where people are, where the reports and kind of people are just saying, okay, well, look, I mean, ICOs, cryptocurrencies, the death of VC. I'm sitting there, oh, geez, that's not good, right? I mean, look, I mean, ICOs, I mean, they may very well be a capital or a path for capital in the future. How mainstream that will be and kind of how likely that is to kind of replace traditional kind of early stage financing, I think that's a question. That's a valid question, because from a venture capital perspective, also from like a GP, I mean, the value that you bring really goes beyond the money, right? It's about kind of the mentoring, it's about the advice, it's about the strategic value that you bring through your own relationships. And that's something that if you're raising money from like a bunch of kind of retail investors that you really never see or have no participation other than just kind of owning your token, I mean, that's not something that they could bring, right? Yeah, I kind of talked a lot about this first point.
Can I just follow up on that first point for just a second? And can I tie it together with a comment that our friend in the back there, whose name I don't remember, that guy right there, said, no, you. You said you got 30 seconds to explain at the beginning why.
Napoleon. You cannot forget that name.
The voice I can't forget, the name I wasn't so sure. I counsel companies all the time to say who are thinking about ICOs, think about your cap table. I mean, the reality is you want folks here on the panel with me who are coming in at the A round and come back in the B and the C and so on and so forth all the way through. I think most ICOs, to me, feel like listing on the London AIM. It's great for the short-term hit to put a little bit of cash in the founder's pocket, but then it's dead money and, to me, death of the company. Sorry for interrupting. What was that?
London, not a good place to go public?
No, London Stock Exchange, the LSE is great. The London AIM, in my view, is a bunch of crap.
Hey, you heard it here.
Heard my Trump comment.
Yeah, we heard Trump too. Okay, let me ask a question. Since many of you talked about all the micro funds that are coming up and the R&B funds, and all these new sources of funding that startups can tap today. So is there too much money today chasing too few deals? What's your view on that?
Could I just, this kind of ties in my third point, so I'll just skip my second point, screw that.
No, we want to hear your second point too.
No, it's fine. No,
Okay, third point.
So the third point is actually a little bit about what Stella was talking about in terms of kind of the exits, right? So there are multiple boards, kind of a lot of options for exits. I mean, I think that that's something that kind of coming out of China, I mean, that's something we've seen a lot of. But actually, I mean, I think in the last 12 months or so, before this kind of recent wave of IPOs, I think that there's not been that many IPOs out of China. Right, and I think that a big reason why is just because all of the kind of strategic investors in China, they're really ramping up in terms of the investments that they're making, right? And so being an early stage investor kind of coming out of China, where we're investing kind of the pre-A, the A, and the B, by the time the C round and the D round comes around, look, I mean, if you're not tied up with a strategic, one of the BAT or the TMDs kind of in China, I mean, where else are you going to get your capital? Right, what is your sustainable kind of long-term growth and kind of capital kind of supply, right? And so for the Series C and the Series D, usually, I mean, these are what, like $50 to $100 million rounds, or even more. I mean, it's really just these strategics that are coming in, and because of their participation, because of their check sizes, and because of their kind of long-term investment kind of philosophy, I mean, these companies, they don't really need to think about an IPO in the short to medium term, right? Because they feel like, okay, well, look, I mean, I have this huge backer, and I can just grow my business on my own, and that's all I need, right? And so I think that that's something that has fundamentally changed in China and probably in Southeast Asia as well, where you're seeing kind of an intake of kind of even the Japanese and the Korean investors, where everyone wants to kind of make a play in Southeast Asia.
SoftBank just had a huge impact, and yeah, Andrew?
Yeah, your question reminds me a bit of the question that was asked maybe 10 years ago in VC when all of a sudden there were all these new angel funds that were spawning. Because the first generation of venture capital successes spawned these entrepreneurs that had a lot of money, all these folks that wanted to do angel investing, and all of a sudden you had this huge class of folks that was able to fund where VCs used to fund seed and A, right? There was this whole new class. And then all of a sudden crowdfunding started, and you had Kickstarter and all these different sources of funding that now are crowding into what angels were doing. And then now you have ICOs and all these other sources of capital, family offices and different foundations, different groups that are experimenting in venture that yet add another layer. And to all this, I would say that all these funding modes are here to stay. So ICOs, whatever you believe is going to be the fate of them, that is going to be a mode, and someone somewhere is going to access that as a source of capital, just like crowdfunding, Kickstarter, and a lot of these different angel groups will have. So what it does is, I think, two things. Number one, it's fantastic for entrepreneurship. It gives more ability for Joe Public or Jane Public to be able to start their own company and have a napkin idea turn into something of significant scale without having to be locked into one source of funding, which in the 80s and 90s early was venture capital. So I think that is fantastic because it spurs this innovation engine, makes Hong Kong a hotbed for new unicorns, just like Southeast Asia or elsewhere. So I think that's fantastic. I think on the other side of it, it puts that much more onus on venture capitalists and other investors at this stage to be able to have a differentiated model. Because again, whereas before VCs were competing with each other to try to get that Series A investee, now we compete against many, many other sources. And so I think to a couple of the panelists' earlier point about, well, what are you doing as a VC that's a bit differentiated? How are you adding value? Is it mentorship? Is it connections? Is it experience going through this process and all that? I think that is you have a higher burden of proof now as a VC to be able to get access to these earlier stage deals. But overall, I think it's a great thing for entrepreneurship to have these sources.
Do you think we're in a bubble right now?
Absolutely.
Okay. So when's it going to end?
Well, I think like many of the other bubbles of the past, and when I'm the least knowledgeable about ICOs, by the way. I mean, you know, other than hearing about it. But I was at a particular wedding that featured the bride who's a sister of an attendee here and the partner of a panelist here. And at that wedding in Indonesia, there were multiple people who, after hearing that I was from Silicon Valley and I was an investor from Silicon Valley, they were asking me, actually a bunch of them were men and women between the ages of 45 and 60 that were asking me, I've got a lot of money. Should I put like $1 million into this ICO or Bitcoin and do that? What exactly is Bitcoin? I think I want to put $500,000 into that tomorrow and tell my private banker to do that. And so kind of like tulip mania, right? There is a bubble element whenever that kind of thing happens. And so, yes, I think across a lot of different pockets of whether it's O2O or different parts of the social media stack, Snapchat kind of next generation, a lot of these things, there are definitely escalating valuations. And with larger sources of capital coming in to be able to buoy those valuations up, I think the music's going to continue for a bit. But at some point, like it always has in history, it will stop. And that's where, again, the investors that are looking for pockets of opportunity where you're not counting on that kind of momentum, hopefully will win the day.
Stuff you're focusing on, yeah. Murray?
So here's the secret, because I don't know the answer whether we are in a bubble or not, but what are these folks saying inside their boardroom, whether they're on 10 or 3 or 6 boards? Start making sure you're cash flow positive from operations to be able to withstand the shutting of the capital markets.
God, I remember that from the internet boom and bust very well. Okay, any final comments from anyone on the panel? Just one second. Any final comment from anyone that we skipped over or whatever?
I think one thing I would add, I think to Chibo's point about IPOs and all that, I think the one thing I would add is you know, although there seems to have been a lack of activity in the past on the offshore side. Actually, there's been tremendous progress onshore, and this is part of the reason why we see this rise of RMB funds, because you know, I think we process something like China processed like 350, 400 IPOs year to date, and so there's a lot of activity going on there. Average PE ratio on Chinex, which is the Changyaban, is trading at about 55 times PE. So there's been a huge wave of not just RMB funds investing in the domestic markets, but also companies that have previously listed on NASDAQ and NYSE privatizing and trying to relist in China because of the uptick in valuation.
Sure.
So these are interesting times. It's
Definitely are. Quick question and quick answer. Right here? Okay. Why haven't you invested in since time, Chibo?
Yeah, that's a great question. Dr. Xu, is he still around, or?
He went back to his lab.
Went back to his lab. Yeah, that's what they do. No, I mean, we very much respect Sense Time. I mean, I think that's it's an example of a great company out of Hong Kong. I think that they were developing very early on, and I think that when they were raising their last round, I think that that's something that was a little bit early for our fund, in terms of our fund being set up and kind of being able to invest. And I think that, look, I mean, there will always be deals that you wish you could have participated in. I think that out of our fund, because we are running the Alibaba Hong Kong Entrepreneurs Fund, it is tied to Ali. I think Ali also made some other investments in the AI facial recognition space in China. I think that was a point of concern for the company.
Good
One
answer.
quick comment.
Yeah, go ahead. Steve.
So actually, China, there's more innovations than in the past. So you have to pay attention to it. And if you just look at the 100 companies that Xiaomi has invested, they're great quality, good design, and it's not too expensive. It's affordable very good for the China market. The innovation and also the design innovation and the creativity that's going on that I see, it's great. There's also a good opportunity for, the Hong Kong people to work with the Chinese entrepreneurs to continue on the creativity side and the design side for big opportunities in the future.
Well, we do have a hard stop now. We have people who have flights to catch tonight because we had so many people come in from overseas and elsewhere. So I would like to give everyone a round of applause. Give our panelists a round of applause, please. And let's pose for a photo as well. And many of them will be around for our reception afterwards, so you can ask some follow-up questions then too.